Hi friends, Dr. Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss about one of the most serious problem that all the traders face. This is the most serious problem, the psychology of a trader. If a trader can control the psychology, can control his mind, then 101% eventually that trader will become a successful trader. Very, very important. Let us look at some of the trading psychology that a trader faces. What is the impact of those psychology and how a trader can avoid falling into these traps? So let us look at it one by one. The first one is FOMO. So what is FOMO? FOMO is that anxious feeling when you feel that you're going to miss out on a trade. The trade setup is not ready, but you still want to jump into the trade. Why? Because you are feeling that if you don't enter the trade now, you might miss out on the opportunity to enter into a good profitable trade. Now, this will happen with traders, especially if you have missed a couple of opportunities. So, what are the issues that happen? Issues are like you enter into a trade before the setup is ready. Because you enter before the setup is ready, sometimes the setup never happens. So you enter into a wrong trade. And because of this, sometimes you also get into over trading because you are entering trades where the setup is not ready. So over trading becomes an issue. How can you overcome this problem of FOMO? Number one is trade as per your strategy. So you plan your trade and trade your plan. Simple. Do not go anywhere left or right. Just stay on the path. Second way you can avoid FOMO is by focusing on the process. Don't rush into trades. If the process is proper, enter into the trade. Then whether it goes into a loss or a profit, don't worry about it. That's okay. Because life is very long. You will get many more opportunities, so don't worry about it. And the third important thing, how you can avoid FOMO is accepting the fact that trading is a boring game. Yeah, you have to wait for the setup to happen. So once you know it's a boring game, you will accept the fact that sometimes you will miss opportunities and sometimes you're waiting very long for opportunities. But that's okay. That is a part of the process. Let us look at the next psychological issue that a trader faces. It's called as revenge trading. Normally, this feeling comes when a trader has gone through a series of losses. You lose a trade, you wait for the setup. You lose a trade, you wait for another setup. You lose one more trade, now you're very angry. Now you want to recover all your money from the markets. When you want to revenge trade, you are entering the trades not as per your strategy, but now you're doing impulsive trading, emotional trading, which is very, very bad. The minute you get into revenge trading, you forget your strategy and you do impulsive trading and you lose even more money. You also forget risk management and you start losing even more money. So it's very, very dangerous. How can you avoid revenge trading? How can you overcome this problem of revenge trading, or how can you stay away from revenge trading? Whenever you hit a stop loss, step away from the computer or from your mobile phone or from the platform for some time and think and analyze. What did you do right about that trade and what did you do wrong about that trade? Give time so that when you come back in front of the screen or in front of the platform, you are now going to analyze the trade in a much better way. Second, how you can avoid revenge trading is by reassessing your strategy. Check your strategy one more time. If you require, backtest your strategy one more time. Make sure, confirm that the strategy is right. If required, do some minor tweaks in it. And then that will give you time so that you again do not get into revenge trading. Remember, trading is a strategic game. It is not a quick entry and exit game. So you have to play as per the strategy. And if you focus on the strategy, automatically you will stay away from revenge trading. Another important thing about trading is accepting the fact that in trading there will be losses and profits. It's a part of the game. Once you accept the fact that losses are part of the game, then you will not be very angry or surprised whenever there is a loss. You will accept it the way it is wait for the next opportunity. So, revenge trading can be easily avoided by following these three steps. The next psychological issue a trader faces is overconfidence. This normally happens after a string of profits. When the trader hits two profit, three profit, four profit in a row, the traders start to feel that, now I have become an invincible trader. I have got the holy grail of trading strategy. Now, using this strategy, I am not going to hit any losses. So, the issues are like the trader becomes so overconfident that they start entering trades, sometimes even before the setup is ready, because now they're too overconfident. Sometimes the trader forgets risk management because they're so confident that they will surely get profit, and they infuse more equity, 5%, 10%, sometimes even 30, 40% of their equity. And then what happens? If the trade hits a stop loss, that becomes a big problem. So, how can you overcome this psychological issue of overconfidence? Very easy. Stay humble. Remember, trading is a strategy. There can be losses, there can be profits. Even after doing everything right, you can hit stop loss. So, remember, be very, very humble. Don't get overconfident. Focus on learning. Now you have learned something good, try to learn something even better. So your focus will be learning and not trading too much. That way you will stick to your strategy. And always remember, risk management is very, very important. So whether you're hitting losses or whether you're hitting profits, psychologically you have to remember that I cannot risk more than one particular percentage in every single trade. For a new trader, it can be 0.25% of their equity. For an experienced trader, it can be 2%, 3%, maybe even 4% of their equity. But I would suggest never go beyond 2% in one particular trade. So, this way, you can avoid the psychological problem of overconfidence. The next psychological problem a trader faces is fear of losing. Now, this fear of losing happens when a trader continuously hits two or three losses, a string of losses. Now, the trader loses their confidence. At this stage, the trader needs somebody to guide them. Now, because of this psychological problem, the trader is not ready to enter into a good trade also. And because the trader is still thinking, what happens? The trader loses good opportunities of trading. So it's very, very important that you remain cool and calm even you hit couple of losses or even five losses. That's okay because losses are a part of the game. Now, how a trader can overcome this psychological issue of fear of losing? Number one, accepting the fact that profits and losses are part of the game. Number two, managing your risk. But the third one is the most important one, having a mentor. A trader should always have a mentor, a senior trading partner with whom the trader can go and discuss. When you discuss your issue with somebody, two things happen. Number one, you feel light. And number two, sometimes you get a better idea. So always have a mentor, a senior trader to guide you. This way you can stay away from this psychological problem of fear of losing. The next psychological problem is greed. Now, this is a very, very serious psychological problem. A trader is not understanding this problem. But this happens when a trader start expecting too much from the markets. Whenever you try to take too much from the market take it back from you because you are waiting for unrealistic profit. You've got a good profit, your target is hit, but you want more. So you're waiting for the price to go even further. Sometimes in this process, the price turns back, it reverses, and sometimes also hits your stop loss. So this greed is very, very dangerous. Because of this problem of greed, you might stay in a trade for even longer periods, which actually is not needed. And you might lose on trades which you were profitable, but because you waited for too long, you lost that opportunity. You lost that trade. How can you overcome this problem? Very, very simple. Make sure you exit at your target. Number two, if you want to go for higher targets, first, what you should do is recover what you have invested. Second, when you start seeing more profits, take a little bit part of the profit and then you let the trade go. Now, if the trade reverses back also, you have no problem. because you have recovered what you have invested, plus you have got some profits out of it. So now you can take the risk. Then you can stay in that trade for a longer period. This way, you can avoid this psychological issue of greed. The next psychological issue is even more serious, the problem of hope. You enter into a wrong trade, you do not exit at your stop loss, you remove your stop loss, and now you're hoping that the trade will reverse back. This is the worst situation to be in trading. Hope is very, very, very dangerous. How can you avoid this psychological issue? Very, very simple. Never remove your stop loss. Number two, risk management in every single trade. You are not going to blow your account because of one trade. Every trade maximum, you cut your trade at 2%, 3%, 4%. That's it. Even if you don't want to put your stop loss, you know once it reaches this level, you're going to exit the trade. Be very, very strict on it. Hoping that the market will reverse is the worst situation for a trader to be in. You will spoil your life, you will spoil your health, you will spoil your sleep because of this psychological issue of hope. Follow three simple rules: stop loss, risk management, trade your plan. Three simple rules, and you will never fall into this psychological issue of falling into hope trading. The next psychological issue is lack of discipline. The mother of all issues is lack of discipline. If you do not have trading discipline, my suggestion is don't trade. This psychological issue is one of the most serious psychological issues. If you cannot make sure that you be a disciplined trader, you better leave trading. Lack of discipline can put you into all kinds of problems. All the issues which I discussed, greed, fear, FOMO, all these psychological issues, the mother of all these issues is lack of discipline. How can you overcome this psychological issue of lack of discipline? Number one, educate yourself. Number two, create a strategy. Number three, fix your risk. Number four, trade your plan. You follow these four steps and you will stay away from this issue of lack of discipline. So, friends, I hope that these small psychological issues, if you take care of, you will surely become a successful trader. It is very, very difficult. It is easy to say, but it is very, very difficult to do it, because to do it, you need practice. If you have to make money in the stock markets, you need to practice, you need to have patience, and you need to have persistence in the market. Without this, you can never make money in the stock markets. The stock market has unlimited wealth, but to get that wealth, you have to go through the process. If you learn this process, there is nothing in this world that is going to stop you from making unlimited wealth from the stock markets. Friends, if you love the way I'm creating these videos, kindly like and share these videos. So like you, there might be many others who want to learn trading the right way. These videos will surely help them to improve their trading. And friends, if you're still not subscribed to my channel, kindly subscribe to my channel and smash that bell icon. Because every time I see a new subscriber, it motivates me to create more such videos. My videos are small and simple, but every single video will help you to improve. And friends, I do not want to finish this video without saying the golden words. Keep learning, keep growing, keep getting better every single day. Thank you. Namaskar.